Welcome, welcome.
Good morning, everybody.
Morning. We'll let folks trickle in a bit. And to test out our comment section, I think Meredith, you wanted folks to say where they or what vet area they work in, and then
Yeah,
yeah.
yeah. Let us know what kind of work you do in the vet field. And if you want, let us know if you're a cat person or a dog person.
Are you a dog person? I guess that would be the case for you. Or are you both?
I'm both, but yeah, I do love dogs.
Yeah. I would say I'm a dog person just naturally because I have a dog. Small animal, dog, nice. And some housekeeping things. We will be recording this meeting, and we'll send out a link to it to registrants after our webinar this morning. And we're going to have some time, I think, towards the end for questions. So definitely feel welcome to use the Q&A section. You can drop any question or anything you'd like us to elaborate on today, and we could circle back to it if we don't get to it right then when you send it. I'll do some monitoring of the Q&A section.
We've got a lot of dog
Oh,
people here this morning.
yeah.
Oh,
Someone
there
in
we go.
financial aid. Welcome.
Feline only vet. There we go. She's a cat
Nice.
person for sure.
And for those that just joined, we told folks if you are interested, drop in the chat where what field you're in and if you're a dog or a cat person generally. Nice. Awesome. Well, I'm Megan with Student Loan Planner, and I'm joined by Meredith. I'll let you introduce yourself.
Hi, I'm Meredith Jones. My background is I worked as an emergency veterinarian for a long time, like over 12 years, and I've done a few different financial projects in the vet space over the past several years, and then made a transition into financial planning and student loan consulting. And so I work with SLP Wealth and focus exclusively on working with veterinarians.
We are so happy to have you, Meredith. Um, Yeah, I think I had done a couple of your conferences. I had come and spoken about student loans, and it was cool because I would talk about a topic and you'd have like some really good questions or some really good elaboration on what I was talking about. And I was like, man, she knows a lot about student loans. And when we were looking for somebody to hire, I was like, I wonder what Meredith is doing. So we're super happy to have you. Well, cool. Well, a couple housekeeping things just real quick, and then we'll jump into it. So we are going to be recording this conversation today. You'll get a link sent to you later tonight, or just later this afternoon in your inbox. Any of the registrants will get this recording, and we'll have some time towards the end for questions. Please feel welcome to use the Q&A section, and we can answer those questions either towards the end or just live as we're going through things. Anything you'd like to add before we jump in, Meredith?
Nope, I'm ready to go.
All right. Let's pop in. So, we're going to be talking about triaging your finances and growing your wealth. I'll let you kick it off.
All right, so I'm going to go ahead and share my screen here.
Hmm.
All right. So, like Megan said, we're going to be talking about triaging your finances and growing your wealth this morning. And so when I say triaging as it comes to personal finance, what I'm talking about is prioritizing financial goals. And so that's one of the things, of course, that we help with at SLP Wealth. And so thanks for joining us this morning and making your finances a priority. All right. And so 5 quick ways to lower your AGI as a veterinarian. And so when I say AGI, I'm talking about adjusted gross income. And so what is AGI and why would I want to lower it? So AGI, it's a line on your tax return. And so your adjusted gross income, so it's the amount of money that you pay taxes on. And so a couple of ways to lower your AGI. One is to max out your 401k. So if you're maxing out your 401k, that's going to reduce your adjusted gross income. It's going to lower the amount of taxes that you have to pay. And then it's also going to lower your student loan payments if you're going for income-driven repayment. And then also maxing out, if you have one of those high deductible health plans, then you would have access to a health savings account at HSA. And so if you're maxing that out as well, that's another way to lower your adjusted gross income.
Mhm.
If you are self-employed, so if you work as a relief vet or you do vaccine clinics or you have a side hustle, you can use those self-employment earnings to actually open a solo 401k or a SEP IRA, and you can use those contributions to lower your taxable income. And then a couple of things as it comes to lowering your adjusted gross income for student loan purposes. So if you are married and you file your taxes separately, if you live in most states, so like common law states, then you can use, instead of your student loan payment being calculated based on your income plus your spouse's income, you can actually file your taxes separately and exclude your spouse's income from the calculation for your student loan payment. And so that can be really beneficial for a lot of veterinarians. They can save potentially, yeah, tens of thousands of dollars or even more than that by making that decision. If you live in a community property state, so that would be like California, Texas, there are several others, and you file your taxes married filing separately, you can also reduce your adjusted gross income potentially even more than if you live in one of the other states. And if you make say you are in a situation where it would be more beneficial for you to use your pay stubs and actually say, okay, this is how much I made based on pay stubs, you can actually do that instead. If you live in a community property state, that may be more beneficial for you. So a few
Mhm.
different ways to lower your adjusted gross income there.
And vets are probably the like top four professions. They're within the top four professions that we work with student loans. Unfortunately, your degrees are quite expensive, like a lot of other medical degrees as well. So these strategies we talk about all day, every day, right? To help people save more money on their student loan payments, get towards loan forgiveness a little more efficiently.
Mhm.
And then go back to that last slide really quick. I wanted to touch on a couple of those little points, if you wouldn't mind. So
Yeah.
super actionable, the first two on here. So people ask all the time, like, oh, how can I lower my payment? Like they're going towards, income driven forgiveness. How can I lower my student loan payment? The first two bullet points are the fastest and easiest way to do so. So number one, max out your 401k or just contribute more to your 401k. So you sometimes folks will start it at the match, like what their employer is providing or what the employer will contribute if they contribute a certain percentage. But you can contribute as far or as much as 23,000 for the year, which is a pretty big bucket to hide kind of all that income from your payment calculation. And if you have access to an HSA, that's another cool bucket that you can contribute to. The family portion or family maximum is 8,300 this year. If you are single, it's half of that, but it's still a nice deduction pre-tax, so saves money on taxes, like you were saying, Meredith, but also saves money on the student loan payments. And a lot of people don't even know about number three, like how if you have that side relief work, that you can open up your own account, like your own 401k or your own IRA. And that's another thing that could help continue to lower that payment. So I saw a question in the chat about a scenario. So we'll get to that towards the end because I think it's a good meaty one we can draw into.
All right. So moving to the next slide. So a few ways to grow your wealth that don't involve student loans directly. And so a couple of things. So Roth IRAs are a great way to grow your wealth over time. So if you're contributing to a Roth IRA, so that's actually a retirement account that you can contribute to as an individual. So it's not tied to your employer at all. You can actually either set that up yourself or work with a financial advisor and have that managed for you through them. And so Roth IRAs, so with that one, you are actually contributing money to it after tax. And then when you take that out in retirement, so when you retire, take money out of that account, it's actually not taxed because you already paid taxes on the money up front. And then I'm seeing more and more veterinarians because our incomes have increased quite a bit over the last few years with COVID. Um, a lot of veterinarians are in a situation where because their incomes are, quote, too much to contribute directly to a Roth IRA, a lot of veterinarians are now using the backdoor Roth IRA. Other reason to use a backdoor Roth IRA would be if you are married and filing your taxes separately to save money on your student loans, you would also need to use the backdoor Roth IRA method. So what is that? So with that, instead of contributing money directly to the account, what you're doing is you actually contribute it directly to a traditional IRA, have it immediately transferred over to a Roth IRA, so that you are using kind of an indirect way of contributing to that type of retirement account.
It sounds silly, and it is, but we have to do it that way. We actually did a whole webinar on backdoor Ross last week that's on our YouTube page, on Student Loan Planners YouTube page. So go check that out if you have questions about backdoor Ross.
Mhm. Yeah, and then another one, and this is really important, and I talk to veterinarians about this all the time because if you have disability insurance through your employer, it's only going to cover you while you actually are working at that employer. And so if you leave, then you don't have disability coverage. I encourage every veterinarian to have their own individually owned policy that is own occupation, meaning that it covers you specifically as a veterinarian. So it's not the type of disability policy that like it'll only pay out if you can't do any job. It would actually pay out if you couldn't work specifically in the veterinary job that you're in right now. So definitely important if you get that policy as soon as possible. So when you're younger and healthier, it's going to be less expensive than if you get it later in life. So definitely recommend doing that. And another thing with disability policies, with the long-term disability policies, a lot of veterinarians haven't remembered because our incomes have increased so much over the past few years. A lot of vets don't realize that they can actually top up that policy so that it'll cover their current income versus covering, maybe several years ago when maybe they were making like $80,000. So definitely a big difference there. And then and so we talked about health savings accounts. We like talking about those, right, Megan?
They're the best.
Yeah.
Yeah.
So health savings accounts. So if you have access to one of those, you can actually use it as a retirement account. And so by that, what I mean is that you can pay for your healthcare expenses out of pocket, assuming that it's affordable, right? If you don't have a lot of healthcare expenses, you could just pay for those out of pocket, but still contribute money to that account. Let it pile up, and it's something that you can use when you get older as a retirement account, or use it for healthcare expenses that are more likely to be more as you age.
Hmm. And
Uh,
it's a kind of a unicorn tax bucket, right? Because it's a
yeah.
tax deduction when you contribute. You can invest it so it grows tax deferred. And then
Mhm.
as long as you take the money out for a qualifying health expense, then it's completely tax free. Like what you take out is completely tax free. So it's a nice like deduction and kind of a discount tax wise on what you're spending it on in the future. But you can let it accrue and grow. And one of our other partners, Sim, she's head of the physician team. She loves HSAs too. But she likes to use it just as you were saying, Meredith, as a retirement account. So what you would do is just save up all of your receipts for anything that could have been used from that HSA account. Let's say you're able to cash flow the healthcare expense, like maybe you had a copay or you had to pay for a prescription or something like that. Save that receipt, throw it in like a digital file, like a Google folder or Dropbox or something like that. And you can bank all of those expenses. And when you take money out in the future, maybe it's not actually for a a healthcare expense, but you have those older receipts that you can point to say, hey, I could have taken the money out at that time. I didn't. Here's a receipt for something that was eligible. Like there's no time limit there, which is really cool. So there's a lot of like cool tricks with HSAs. We'll nerd out about it on another webinar at some point.
Yeah, we probably have enough to say about HSAs that we could have a whole webinar about it, right? So,
Mhm.
yeah, so the three bucket strategy for retirement savings. So I'm going to expand on this a little bit more in a couple of slides, but for most veterinarians, the three bucket strategy for retirement savings is going to be your 401k, probably a Roth IRA, and then also a brokerage account. So like a non-retirement investment account. And so we'll expand on that as we go. And then negotiating your total compensation package and not just your salary. So I run a big Facebook group. I see that we have a lot of folks who are very salary focused when they're comparing job offers, but it's really important to make sure that you are taking the benefits into account as well and actually assigning amounts to those as far as what those benefits are worth, and that way you can make more of an apples to apples comparison when you are looking at job offers. Okay, tax loss harvesting. So tax loss harvesting, um, with that, what we are talking about there is selling investments at a loss. And so what you can do when you're, and this is for your taxable investment accounts, like a brokerage account, if you have investments that you sell at a loss, then you can offset gains in other investments. And you can actually write off, if you have like net losses at the end of the year, you can actually write off some of those losses on your taxes and use that as a way to save money on taxes. So that's pretty cool. And we do a lot with tax aware investing as well.
A lot of our folks too, the folks that we work with are saving in these brokerage accounts for a potential tax bomb, is what we call it, for student loan forgiveness. So we're going towards that forgiveness timeline. The forgiven balance could be taxable to us. So that taxable brokerage account is super helpful because we can save for those taxes. And along the way, if we're doing tax loss harvesting, then we're kind of hoarding any loss that we will naturally have at some point. Like the market is not a straight line. The best example I've ever been given when it comes to like the stock market or investing was from my professor back in college. And he said, think of investing like you're on an escalator, like, one of those ones that automatically go up, and you're playing with a yo-yo, right? Because over time, you're going to be going up. That's how historically what the stock market has done. But there's going to be some like ups and downs along the way, but the trend is going up. So we're going to have some losses. And if we're taking advantage of those losses actively, then we can really cut down on the taxable part of that account, like having to pay taxes on the growth of what we're earning, which of course we want to grow the funds. But if we can minimize how much we're having to pay taxes on that growth, that's a big plus. So that's what, in essence, the tax loss harvesting strategy would be.
Yeah, for sure. And then using your production pay or your bonus strategically. And so a lot of veterinarians are on production pay, like salary plus production, and maybe they get a production check monthly or quarterly. And so I see two different ways that this can affect their financial management, and because they have an irregular income, right? And so couple of things. I'll often see, especially since COVID has hit, I'll often see veterinarians who just have a huge amount of money in savings. And it's all from these production checks, and it's just something that is piling up. And that can be a good thing. I mean, you could use your production pay strategically to spend it on a vacation so you can take a break, right? So it can be okay to have some extra money and savings related to that, but you could also use it to save for your future and invest and grow your wealth. And so that's one way that you could use that production pay more strategically and just be really intentional about what you're doing with that money. Now, the flip side of that is that you could also, if you're not being strategic and kind of earmarking your production pay for a specific purpose, then it might just get spent, right? So that's another thing that's possible. And then budgeting for life and career transitions. So a lot of us have made career transitions since COVID. And of course, a lot of us are going through different life transitions. Maybe we're moving, maybe we're starting a family, getting married, buying a house, things like that. And so getting a handle on your budget as you are making those transitions. Okay, and so then we move on to talking a little bit more about budgeting and cash flow planning. And so uh,
Favorite. That's my favorite.
that is Megan's favorite. Yeah, cash
Yeah.
flow planning gets Megan very excited. So,
Lame, I know. I've got the, yeah, I'm not a super interesting person. Just kidding. Go
well, we're
ahead.
all a little bit nerdy, right? That's why we do what we do. So most people, though, when I use the word budgeting, they are about as excited as this corgi is to have his temperature taken, right? And so I encourage you to take a TPR on your finances. And so what you'll do is you'll track your expenses. And so for a lot of people, this isn't the old like using a spreadsheet. Maybe Megan uses a spreadsheet, but a lot of us are just hooking up our accounts to an app and having this done automatically. And so it's not necessarily something that you're going to do all the time, but it's something that you want to check in on your expenses once in a while and make sure that you know where your money is going. And then use that information to prioritize your spending and your saving. And so a lot of people, when they do that, they're able to say, okay, well, I've actually got, this extra money each month that I could allocate to another financial goal. And so using this cash flow plan is kind of like a diagnostic tool where you're like, okay, I'm evaluating how much up versus down I am from month to month, and then using that to allocate to various goals. And then you're going to want to reevaluate that plan every once in a while as life changes.
Yeah. And I'd like to tell folks too, like, I think budgeting has kind of a restricting feeling to it, like when you hear it, and probably traditional budgets have. I think like a traditional budget is kind of exhausting. That's where you're tracking like every category, like specifically, and then staying within a budget in that category, which can be really hard to track over time. But I think what we like to help folks realize is you don't have to budget that way. We can budget in a way that works for you. And a lot of times a parameter-based budget is super helpful where, we're not picking and choosing how much we have to stay within in every single category every month, but by the category. We're picking like looking at maybe our variable expenses, the ones that do change month to month that aren't exact bills, like our insurance or the mortgage, for example. And we're just giving ourselves a parameter. Like each month, we should probably stay within X amount in these variable expenses. And that gives you a lot more freedom to, maybe this month you had a lot more brunch dates with your friends, but next month you're going to be doing a little more travel. So, like, it gives you the opportunity to give and take in different categories if you're just looking at it from a total parameter perspective. And so with our planning, if you are a client with SLP Wealth, we do help folks find that parameter. And then, like Meredith, you were saying, really help find what that surplus is. Or if there's not a surplus, like what are some ways that we can maybe reduce or cut things out of our budget that don't bring us joy or that we don't really enjoy spending money on anymore. Or how can we make more to kind of make sure that we can make room for saving and putting money towards those other financial goals that you have? So it's definitely awareness. And I think once you have the hang of your parameter-based budget, it gives you a lot more freedom and less guilt about spending money. Because we hear that a lot too, like, oh, I feel guilty, like even getting a coffee.
Mhm.
Or, if you're a millennial, getting avocado toast or something, right?
Yeah.
You might not have to feel guilty about it. If it's within your parameter, spend your money on whatever you want. But this I do think if you are implementing like a budget, doesn't have to be the traditional style, but if you're implementing or you're aware of where your money's going, then it could be a more freeing feeling in your finances.
Hmm. Yeah, absolutely. Yeah. And if you love lattes, we want you to buy lattes. So,
Yes, if that brings you joy, keep it in there.
yeah. Okay, so let's dig into that three bucket strategy a little bit more. So when I'm talking about the three bucket strategy for most veterinarians, this top bucket here is going to be your 401k. And so, okay, so when you put money in the bucket, it's going to be tax deductible. So this is pre-tax money. You're not going to be taxed on it today when it goes into your 401k, or if you're in a nonprofit or academic role, then you might have a 403b. And then when you take that money out in retirement, it is going to be taxed as ordinary income. And so we talk about having different buckets that reflect different ways that you might be taxed on the money when you take that money out. And so down here we've got the Roth IRA. So with that one, you are using basically your take-home pay is going into usually it's a Roth IRA. It can be a Roth 401k as well. A lot of vets have access to that as well. Now, I will say with the Roth 401k, if you've got student loans, there is an advantage to putting more money into the traditional side of the 401k, so that you can get that reduction in your adjusted gross income and get that reduction in your student loan payment that you wouldn't get if you use the Roth 401k. But you can still use a Roth IRA so that you've got that advantage of that after tax money going into retirement. And then what happens there is when you take money out in retirement, you will not be taxed on the money that went into the account or on the gains in that account. And so that's pretty cool, being able to take that money out in retirement and not have any tax implication whatsoever. And then we have this taxable account. So these are the brokerage accounts, so the non-retirement investment accounts. They can be used for retirement goals, especially if you want to retire early. This could be a great way to actually save additional money for retirement. So you put money into a brokerage account. So it is after tax money that you're putting in there. And then when you either sell funds in that account or when you take money out, say for the tax bomb at 20 to 25 years, when you hit forgiveness for your student loans, when you take that money out, or if you are using it for some other purpose like retirement or some other long-term financial goal that you have, then you're going to be taxed at capital gains rates. And so capital gains rates for most people, it's actually on this second slide, for most people, long-term capital gains rates are going to be at 15%, which is probably the lowest tax rate that you're ever going to pay, right, Megan?
Yeah,
Yeah.
definitely.
Yeah, yeah. And so the three different buckets. So we talk about tax flexibility. And so having, if you're at an income level where you've got, say you're at the level where you're, maxing out your 401k already, you are maxing out a Roth IRA already. A lot of vets are asking me, okay, where can I put money next? Because I want to save more for retirement. So in that case, you are probably putting it into a brokerage account at that point. And so different ways that the money is taxed. So your 401k money is going to be taxed at ordinary income rates when you take it out in retirement. Otherwise, it's just going to sit there until you retire. And then we've talked about the long-term capital gains on the brokerage accounts. And then for any money that is in a Roth account, like a Roth IRA or a Roth 401k, when you take that money out, you are only taxed on it up front. And then when you take it out, you're not taxed at all in retirement. So that's a really big advantage with those accounts. Anything else to add there, Megan?
I was gonna say, would you be okay elaborating on simple IRAs? Because
Mhm.
Travis is in the chat now. But he's right. Like vets are by far the biggest users. Like we've never seen so many
Mhm.
simple IRAs in a profession. Tell us a
Yeah.
little bit about like what maybe why that is and what you can do with your simple IRA, all of that good stuff.
Yeah, absolutely. So with a lot of smaller vet clinics, or a lot of independently owned vet clinics, it is less expensive for the employer to set up a simple IRA. At least it has been until some tax breaks came through this year. Historically, it has been cheaper to set up a simple IRA. And so what happens is a lot of because there's been a lot of consolidation in the veterinary industry and because people move from one job to another, right? A lot of our clients have older simple IRAs and they're like, okay, what do I do with these? so
Mm-hmm.
so in a lot of cases, you could actually just roll it into your current employer's 401k. So that's a common thing that we do with simple IRAs. But yeah, the simple IRA, if you currently have access to one of those, that's another very common pre-tax retirement account that is used in the vet field.
Mm-hmm. Now there's a couple technicalities about just like with anything, right? But simple IRAs, like we can't move it if it's less than 2 years old. So there's just some rules that come with a simple IRA where if it's brand new or within 2 years old, you can't move it anywhere, but you can after that. It could still be invested while it's sitting wherever it is. But you are right. I think simples used to be a good option for maybe like less of a costly option than setting up a 401k. But a lot of changes have happened with the Secure Act, the Secure 2.0 Act, where there's been a lot of they're trying to make there be more of an incentive for people to open 401k plans. And so the Secure Act is really helping cut down, well, not actually cut down, but basically giving employers credits for opening 401k plans to pretty much make all the costs associated with opening a 401k plan almost free, depending on like where you're opening it, of course. But so that's really cool because there really is a push for people to be implementing these 401k plans, which we think could be better because they're a bigger bucket that you can save in. Depending on where they are, maybe they have better investment choices, but mainly like the bigger bucket, right, to be able to contribute to over time, which is a big deal. So, if you have an old simple, let's say you're an employee or you're not an employer, you could roll that into your current employer account as long as it's not 2 years or younger. If it is, you have to just wait until you hit that timeline. Then you can roll it into your current employer account. Or you, and if you are an employer, I think it could be a good thing to talk to Meredith about potentially in the future to decide if opening a 401k plan could be something better for your practice, better for your employees, and better for you as the employer. Because as the employer opening a 401k, you have a lot of freedom on how you can design it. You could have profit share capabilities where you can decide to make a discretionary contribution to your employees' 401k accounts and yours. So there's a lot of flexibility, we think, with 401ks. And now that that barrier of cost might be reduced or taken out of the equation, simple IRAs are just not super cool anymore. Not as cool as they once were.
Yeah, for sure. Yeah, so lots of yeah, and the other thing I'll throw in there is if you do work with a independently owned practice that has a simple IRA, you might want to just kind of nudge your practice owner and say, "Hey, can we switch this over to a 401k because there can be some great advantages to that. You can contribute more as an employee to that account each year." So
Yep.
okay. So, quarterly triage. So, when we're thinking about the different quarters of the year and places where we might want to focus with our finances. So, in quarter one, if you haven't already made your Roth IRA or backdoor Roth IRA contributions, then you still have time to do that for your 2023 contributions before you file your taxes. And so you can make those contributions for last year. If you are a self-employed vet and you have a solo 401k, same thing, you have some time to make those contributions for the year 2023, your HSA contributions as well. And then for quarter one and quarter two, really, just thinking about, okay, when and how should you be filing your tax return? So would there be an advantage to potentially filing an extension if it might save you money on your student loan payments, depending on when you have to recertify your income? So those are things that we talk with veterinarians about quite a bit. And then also, if you are married, looking at, okay, is it more advantageous for me to file my taxes jointly or separately? And so there's a lot of cases where it would save you money on your student loans to file your taxes separately, but not for everyone. And so taking a look at, okay, how can I maximize things when I'm filing my tax return? And then for quarter three, so that's a good time to review your estate plan, which is not the favorite thing for a lot of people to think about, but definitely is important. And then also making sure that you have enough insurance coverage on the life insurance side, and touching on that long-term own occupation disability insurance again there. Quarter four, so it's usually October, but it can vary from one company to another. Selecting your benefits through open enrollment and just making sure that you are optimizing things for your situation in quarter four.
So most immediate things that folks can be thinking about to maybe triage what they should be doing with their finances, check to see if you maximized your savings buckets last year. So the IRA, if you need to do a backdoor Roth IRA, you could still do it till April 15th, which is generally like the tax filing deadline, or before you file your return. And, you can also, another quick tip is if you are interested in this solo 401k idea, you can open one right now, even though we're in 2024. And the Secure Act has allowed us, if it's a brand new plan, for you to be able to contribute for 2023 still, even though we're in the new 2024 year, which is pretty cool. So we've done that with many clients who didn't realize, oh, that's a great option for me. I should do that. And we've been able to open solo 401ks for folks and get them to start contributing something to it before the deadline. So super handy when it comes to timelines and thinking about what maybe you could do to maximize last year's. And then you could proactively start thinking about this year's. But filing status, that's the next up. So yeah, quarter one, quarter two, like these two things are really the main things. If you had to triage or think about what you should be focusing on right now, think about these two things, because how you file your return for 2023 also affects how you could have contributed to like a Roth IRA from last year, and it'll affect your this year's payment for student loans. So all of these little things are intertwined, right? And timing matters. So if you need help, we're here to help you.
Okay, and so veterinarian specific financial planning. So why is that so important? So, and of course that's what I do is I'm a veterinarian. I work with veterinarians on financial planning. And so we know planning opportunities that can get you to financial independence or work optional faster. And so definitely being familiar with the veterinary compensation structures, and just talking about, okay, how can you be efficient with your income, even though a lot of vets have that kind of irregular income throughout the year. And we talk a lot about student loan aware financial planning. So we can come up with strategies like what we've talked about here to lower your adjusted gross income, lower your taxes, and then also lower your student loan payment by optimizing your strategy with your student loans. And then definitely, as a fellow veterinarian, I understand the pain points that come with the profession. I know what it's like to graduate with six-figure student debt, and definitely, the long hours and the unique stressors that come with the profession. And so I'm talking a lot with my clients about career transitions and talking with them about different job opportunities and things like that that can be very specific for veterinarians.
Yeah. So who the heck is SLP Wealth? Well, so you probably know us from Student Loan Planner. So SLP Wealth is the kind of the next step or the result of a lot of us getting together and saying, hey, what should people do after they meet with us for their student loan consult, right? So naturally it was, yay, we got a plan for our student loans. I feel great about it. What's next? And we didn't really have anything for what's next yet. So we created that what's next. So, SLP Wealth, we're a comprehensive financial planning firm. We're fiduciaries. We help you vets, avoid huge money mistakes. So, all the things that we talked about today, or the little tips and tricks, like these are things that we help our clients with every day. And our goal is to help you achieve your goals. So, whatever those goals are, we are a very goals based or goals driven firm where our planning is goals driven. So, we want to make sure that what's important to you is what we're working towards. So, that's really the first thing we ask you in an onboarding call is, hey, what do you want to accomplish? And we're going to help you get there. And we're a team of highly educated individuals. We're all CSLP, certified student loan professionals, naturally, because we love student loan planning. We think it's a huge piece of the puzzle when it comes to your finances. And once that elephant is tackled, then we can feel free and feel welcome to move on to other financial planning topics. We're a team of CFPs, certified financial planners, CFAs. So alphabet soup behind our name, but we've really enjoy the student loan planning aspect of our planning overall, but also, of course, like the rest of the financial planning, like the nitty gritty stuff that we talked about today. And our planning integrates with your student loan plan, which we know that that's not really the case in the financial planning world. Like that's not the standard. Student loan planner, we would consistently work with folks who their advisor referred us or referred that client to us because they didn't know how to handle the student loans. And as we know, the student loan decisions that we make and like filing status decisions we make because of student loans, that affects a lot of our finances. So we have a really great way to integrate your student loan plan with the rest of your financial plan and kind of a one-stop shop in that sense, where we're managing your student loan plan on an ongoing basis and then the rest of your finances too. And I would say we are the best vet specific financial planning deal that you're going to find. So definitely feel welcome to shop around. We're $99 a month. That's the cost to become a financial planning client of ours. It is traditional in the financial planning space for there to be like an annual fee for thousands of dollars, especially if you're looking at a like profession specific group. So feel welcome to shop around. But I think we offer a lot with where we are. And how you can get started or how you could entertain working with us. There's a couple different ways. If you've never done a student loan consultation with us, that's the first step, right? Because the student loans are the biggest thing we have to maybe tackle right off the bat. And also, a lot of the decisions we make with your student loans will impact some of the rest of our planning objectives potentially. So that's step one if you have not already done a consultation with us. If you're already a student loan planner client, then you could use either way, you could use this link, it'll direct you to the right place. But if you are already a student loan planner client, you can get started with just setting up your onboarding meeting. If you need a refresh of your student loan plan, we could do that as part of the financial planning process. So you set up an onboarding meeting, you get together with Meredith. We'll put the link in the chat for Meredith's specific link too. Actually, this will direct you straight there. And then you get started. And we're big about flexibility and being transparent. So we don't have terms or uh, contracts associated with working with us. So you're not locked in for a specific period of time. If we don't wow you with our planning, you can cancel at any time. But anything you'd like to elaborate on there, Meredith?
Um, yeah, I mean, yeah. So if you'd like to work with us on your financial plan and get that student loan aware financial planning, veterinary specific financial planning, you can, yeah, use that link to work with me. I work with veterinarians all over the country. And then I think, Megan, were you going to also share that, like for folks who have questions before
Mm-hmm.
signing up, the intro call link as well? So a couple different links there to get started. And
Mm-hmm.
yeah.
Yeah, if you have additional questions before you'd like to schedule that onboarding meeting or before scheduling that student loan call, we do offer a free intro call. I dropped that link down in the chat. It's 15 minutes. Ask all the questions you need to. Meredith can elaborate on the process or the scope of our services to help you feel confident with moving forward. Hey, Travis.
Hey, I thought it was the party. How y'all doing?
Good.
Good.
How you doing?
Good. I mean, I just want to brag a little bit about Meredith. So I was just looking at your average like client reviews, and you're like one of our top three rated advisors, like at the whole firm. And you're also like specific to vet med, right? So like veterinarians get so much advice that's like really bad. Like I remember like one of my first veterinarian calls was like some person being advised by a whole life person. And like the whole life person was like selling them a bunch of like guaranteed investment returns at like 5%, and her student debt was 8%. Now, she needed to go for forgiveness, but I like called the advisor out because he was giving her all this advice that was terrible, and she was so confused. And I was just like, so I sent him an email. I was just like, so, just curious, like, why do you feel like it's okay selling 5% yielding investments that you're praising or guaranteed when her debt's at 8? So you're guaranteeing that she loses 3% a year. And then he like defended it and said, I've been doing this for a long time. And I said, just to repeat again, if you're selling someone 5% investments and their debt's at 8, then you're either unethical or you're stupid. And regardless of which one you are, I don't think she should work with you because you're probably both.
Mhm.
And it was, I always said that I was a little bit more of a firebrand back then, but I just like got really pissed off because this advisor was just like really jerking her around and hurting her and just like totally looking out for his 10%, his massive commission checks and stuff. And gosh, like that pissed me off so bad. And like we didn't do financial planning back in the day because like it was just going to be too difficult, like from a compliance perspective, Like I think people don't understand what goes into like offering financial planning. Is that a fair statement, guys? Like,
Yeah.
I mean, just in terms of like, the costs for offering it are really, really high because you have to get regulated by all these states and you have to have like hundreds and hundreds of clients before you can be federally regulated, which makes it like really difficult still, but it's more possible. And so we just realized that we had enough clients to just get federally regulated. So SLP Wilson, SEC registered investment advisor. And then we realized, hey, we have enough veterinarians to have like a vet med specific group with Meredith. And like I think when you joined Meredith, you were serving like, your other firm, you were like, yeah, like a dozen clients, right? Something like that.
Yeah. Hmm.
And now you have like well over 100, and I think you're going to be full like really, really quickly. Just because there's such a need out there, and the price that it is so much cheaper. So I'll
Mhm.
just pop that link if people want to sign up one more time. That'll redirect to the exact like vet med specific page that you would book a call with. And if you know you're ready to go, don't waste time with an intro call. There's no point to an intro call really. Just go ahead and get moving, get the changes happening, right? Ditch your simple IRAs and replace them with
Hmm.
401ks. Like, get your taxes filed the right way. Uh, you know, Understand how to use
Hmm.
a brokerage account to save money, understand how to do tax loss harvesting to offset the future, capital gains in your vet practice when you sell it one day. So I just think you're doing amazing work, Meredith. And I think people are, unless they're just like absolutely destitute financially or just, not in a good place financially, I think that would be silly not to use your services for the price because you're doing some great work for clients.
Thank you.
Meredith, I said I was going to be your hype girl today. It looks like Travis is your hype guy.
Let's see.
Well. Yeah, and I think with our financial planning as well, especially with Meredith, I think we're very big about education too. So we are naturally, I think all of us are naturally like educators. We want you to feel confident with what we're recommending or what we're thinking is best for your plan. So if you're not as familiar with that area, we're going to do some time educating you on that area as well, so you feel like you're making a good choice and you feel confident with that choice. That's really big for us. We actually have a few former educators on the team, like literally. So I think that's what financial planning is. It's a lot of education. And of course, there's recommendations and implementation, but a lot of it is education and just knowing what little tools we need to put in your toolbox and how to maximize them overall.
And real quick, I just had a couple people book onboarding meetings with Meredith that are already SLP Wealth clients. So if that was you, you don't actually need to book an onboarding meeting. You can just like
Mhm.
reach out to your existing advisor and nudge and just ask to switch to Meredith. So thank you for
Yeah.
the person that just booked the onboarding meeting with Meredith. But you don't necessarily need to do that. You can just switch with reaching out to your current advisor. But anybody who's not working with SLP Wealth already, can use that link to sign up. But they,
Yeah.
so you're
Yeah.
making quite the impression.
Yeah, you
Um,
could set up a fresh like kind of onboarding or planning type meeting with Meredith. Your current advisor will not be hurt if you decide to make the switch. We're encouraging it since I mean this is we were very intentional about starting to create these specific profession based groups. So if you started with us like back in March or sorry back in May of last year or like earlier on before we officially defined this group, you're totally welcome to make the switch to Meredith. That's totally fine if you're a current advisor. Um, so let's see. I think we got through a lot, but there were a couple questions, or there's definitely one in the Q&A section that's very situational. So maybe we could use it as a quick uh, case study. I'll just kind of read it out. So this person files taxes in Arizona. Arizona is a community property state. So community property states, there's 9. Let me see if I could do this off of memory. There's Washington State, California, Nevada, Louisiana, Texas, Wisconsin. There's a few more. New
Idaho.
California,
Mexico. I said California. Idaho. Yep.
Washington.
Got Washington. There's one more. What's the last one? It's basically all on the Pacific border, the Pacific and Mexico border. And then randomly, like Oregon is not, but Wisconsin is. So it's like those two states swapped for some reason. But those are community property states. The significance of that, real quick, is just that if you are filing taxes married but separately in a community property state, your income as a household is community property. So instead of just your income, like let's say you make 100,000, instead of just your income being on your tax return, that 100,000 and your spouse, let's say they make, 50,000, instead of 150,000 being on each tax return, they take your total income and divide it in half between the two tax returns, basically splitting it. So 75 would be on one tax return, 75 would be on the other tax return. So it is a pretty strategic thing that we use for we call it the breadwinner loophole. So if the higher income earning spouse has the student loans, the other spouse does not, we could file taxes separately, and their income, just by the way the state splits the income, makes that student loan payment lower because the income on the tax return looks lower.
Mhm.
So kind of the nuts and bolts of that. But my wife is a vet that will make about 20 to 24,000 this year. She is on an IDR plan with your help and has 130,000 of outstanding federal student loans. My income should be around 40,000 this year with the service business, so an LLC filing as an S corp. I have real estate investments under another LLC that get a lot of depreciation through K1s. We live abroad and have 2 minor children. Oh, interesting. So you live abroad. You have 2 minor children. They can both be claimed by her. What would be the amount of retirement 401k that could be cashed out to minimize taxable income? Can it be done now for 2023? I wonder if you meant contributed versus cashed out. Would it be better to file separately or jointly? My 401k is about 30,000 and hers is 80,000. We would like to move it all to investments that will provide us with cash flow today instead of waiting for retirement age. Okay. So I've got a lot of thoughts on this so far, and then I can let you layer in, Meredith. If you were to cash out from your 401k, you are going to have to pay taxes on that money, but you're also going to have to pay a 10% penalty because if you're under the age of 59, I don't know how old you are, but if you're under the age of 59, you're going to have to pay penalties for taking an early distribution from your 401k. And if it's a 401k that is at a current employer, you can only really take a distribution if you have a hardship. You have to prove some kind of financial hardship or prove that you're using the money for like a first time home purchase, but you wouldn't be able to do that abroad. So that's one thing to keep in mind is that if it's a current 401k, there's definitely going to be limitations on being able to take money out. If this is an old 401k, you could roll it to something different, like an IRA, for example, or you could start converting it into a Roth IRA to, start getting it into a tax-free bucket. But the cash flow situation, I think we would need more context on why you need the cash flow. If it's just budget wise, like we're not able to do it on the 20 to 24,000 or the 40,000 that you're earning, then I'd be more curious about maybe like implementing a budget before starting to take from the 401k. But what are some of your thoughts? I've got a couple others, but I'll let you jump in, Meredith.
Yeah. So then the next thing that I want to make sure we comment on is, okay, they live abroad. And so, okay, so if you live abroad, and so if you live abroad because you're deployed with the military, then that's another thing. But if you're not in the military and you just moved abroad, then one thing that you could consider is that there is something called the foreign income exclusion with your student loans. And so what you can do is the first, it's either $100,000 or $120,000 that you make each year can actually be excluded, and you don't have to excluded from your income and not taken into account when your student loan payment is being calculated if you're on an income driven repayment plan. And so what that amounts to for your wife as a vet who's making 20K to 40K this year working abroad, she could probably get $0 payments on her student loans. And so that's something that, it would definitely encourage you to schedule either an onboarding meeting with us or a a student loan consult with us. And we can talk more about that.
Yeah, I think definitely this is a cool like case example, but it's also, I swear I tell folks this all the time. Like I think with financial planning, like we ask for a lot of detail, and this is some good detail. Like there's some factual details in here we could use, but almost always we're going to come back with 5 other questions that we need to clarify. Because is your income earned abroad? Like, are you earning income from a foreign entity, or are you earning income from a US entity? You're just physically living abroad. Are you military? Because there could be some rules around military. So lots of good detail, but still more detail needed. But I do think there is some planning that could be done around the student loans that could make a student loan payment really low, either by filing jointly or filing separately. If your income is earned abroad, like it's foreign income, you may not have to be filing separately because that foreign earned income exclusion, I think right now it's like last year it was 115,000. I think it's like 121,000 of an exclusion from your tax return. So if you're making 40, she's making, 24, that's 64,000. You're already excluding and that 120 is per person. So your income on your US tax return, if you're earning foreign income, would be 0, which is pretty cool. But if it's US based income, the income may still be low enough with your family size to be 0, even if you're filing jointly, depending on what your adjusted gross income is going to be with those property depreciations. So I think for this person, a student loan consult could be super helpful to make sure that if you are looking at tax filing status right now, that you don't file separately if you don't need to, because we could talk through if you need to. or if you need to consider it, that might be something you could avoid with where your income is and what your AGI might be. And then also just making sure we're on the best plan. So someone who might have a really low payment could potentially benefit from the SAVE plan. It has a really nice interest subsidy that would discount or that basically would waive any accruing interest on the balance. So when your balance is forgiven in the future, the balance hasn't ballooned. Where the pay plan or the new IBR plan, it's a shorter timeline, it's 20 years, but it doesn't have that same interest subsidy. So the potential tax bomb in the future could be bigger with this lower income. So I think a student loan consult is what I would suggest. I think that could help answer a lot of these questions, but hopefully this is enough food for thought for what you had asked. Anything you want to add before we close out?
Yeah, I mean that's pretty much it on that. Yeah, I mean if it's for example like telemedicine work with a US based company, then yeah, then you'd be more looking at your student loan payment being calculated based on the income that she was actually earning. But if it's foreign income, then yeah, looking at the foreign income exclusion and likely having $0 payments on student loans, which would be pretty cool.
Mm-hmm. Well, thank you guys for hanging out with us today. That introduction call link I have in the chat for Meredith, that is free. That is if you are trying to decide if you would like to move forward with planning. It's no cost to you. You get 15 minutes with Meredith to ask your questions. She'll elaborate on our process for you. And then we have this booking link up here for if you would like to go ahead and schedule either your first student loan consultation and or your planning meeting. And this will direct you, basically how you answer the questions will direct you to where you need to go. So if you're not interested in planning, you just want to do the student loan consult, you won't get the initial discount for the student loan booking, but you could make sure that you get on the calendar here to get your student loan plan done. But if you are interested in planning, you've never done a student loan consult with us, you will get a discount on the student loan consult, and it'll direct you to schedule your planning meeting, which that can start with Meredith when your availability allows. And then the planning is $99 a month going forward. No term contracts. You can cancel at any time. Our hope is that we wow you and you want to be here with us forever and we create a great planning relationship, right?
Mm-hmm.
So, any closing thoughts, Meredith or Travis?
Thanks everybody for joining, and I look forward to meeting you.
Thanks, guys.